Welcome back to Java, and thank you kindly for joining me. It's December 1st, 2025. It is also known as Cyber Monday in the United States, where you can spend the rest of any money you might have after you spent it all on Black Friday. Now, interestingly, Black Friday is named that because it is the first day of the year that retailers in general go into the black, which means they are finally making profit after all of their expenses. So hopefully the sales, they are looking forward to these, to being enough to kind of pull them out. It's been looking a bit weak. Consumer sentiment is very weak. So this could be very important indeed. We're not going to get the numbers for a while here, but we can kind of guess with the direction that it's headed. Now I want to talk about this no more Drano, as well as the big boys are back in the trading rooms. We've got the smart money back in. So we're going to see some volatility today, is my expectations. We've got a bit of a start down. Let's get started with what's going on in the markets. We've got the fear grade meters at 24. So still an extreme fear, but a lot of retailers bought in Friday. This could change this morning. Now, the daily driver I'll stuck to this is dichotomousness. We're talking about the end of QT, and I'll bring up that in details a little bit more. It's the Fed again. Not so much easy money pumping in, such as in the rate cuts or something of that nature. But as I said here, removing the headwinds because they're no longer tightening as of today. Now, there was an issue also Friday, which was very interesting timing. CME, the exchange, had an outage, and this was right at the time that all of this, there was a lot of high trading going on with the precious metals. So this did spark a bit of a rally in the precious metals, and there is a lot of speculation about ability to deliver the physical metals. So with all of this, it's an inflation play. We've also got Japan still in the works that we're watching because they've got to kind of protect what they've going on with their economies. We're watching the Japanese bonds. They could dump United States bonds, so that is a flag warning as these swans are circling. So aside from Japan watching their 10-year yield as well, United States 10-year yield is increasing. This means that money is flowing a bit out of treasuries. Stop purchasing treasuries. The Fed is portion of this. They're affecting that. So the 10-year yield, as we know, affects the rest of the market. Relative strength of the dollar is down a bit. That's giving a little bit of room into this little bit of breathing way. We've got cryptocurrencies are getting hit quite hard. Now, Bitcoin's still above the 85,000. If it holds above there, that could be pretty good. They're a lead indicator, and they're all down a decent amount this morning. So looking what cryptocurrency is going to do as far as this. Now, the other indicators, the volatility index is down a bit. Gold is up. That's our safe haven structure. And then oil is up, but that is on the war, more war stuff going on. Now, silver did hit above $58, which was kind of the level that I was looking at. Hopefully looking at a bit of a pullback from here. That would give it a little bit stronger legs for another run down the road. So let's take a look at a few things with the calendar. It's going to be very short today, so my apologies for being late. We've got the S&P final manufacturing numbers coming out. So this is inflation in manufacturing, which we know is going to come down into the products itself. And then tonight, Powell is going to be speaking. Listening from Bowman tomorrow, and auto sales are going to be interesting as a bit of an indicator for the real economy. See if people are indeed purchasing vehicles still, or if those numbers are down. I suspect they'll be down. Now, I wanted to bring up this treasury market resilience and the early end balance sheet runoff. Now, they were a little bit mixed on this. The Fed governors from the notes saying that the ending of quantitative tightening is ending 3 years after it began. So in short, the purchasing of the treasuries as I was saying, that is affecting the 10-year yield. So they're still in yield curve control. They are still purchasing treasuries. This is just kind of a forward facing to the public that they're starting this, or at least ending this quantitative tightening. They're not starting the easing yet, but they're halting the tightening. So this is kind of a lag effect to the market because people don't really catch on to what's going on with this. But I expect this is going to be more inflation, which would include stocks, precious metals, and all assets. So it's kind of a struggle, a lot of volatility. I expect some chop going on between this pushing on the one side as well as the sentiment on the other, and the market just getting weak because it's just run so hard and so long. So I think that's going to cause a little bit of those volatility waves. Wanted to bring this up about Amazon Web Services and Google Cloud now saying they're unveiling a joint multi-cloud networking service. We have two of the largest. Now, if they had Meta in here, they would have all of your information. Amazon Web Services of late has gone very heavy in cornering the business market and with their cloud services. And Google Cloud, of course, has all of the Gmail, as well as now they have their quantum chips and a lot going on. So I don't know so much multi-cloud as one massive cloud that they're opening up. And when they do this joint, depending on how much goes into it, could be massive surveillance and other issues down the road that we have been speaking about. Now, on the other side of this is the digital stablecoins coming in, digital currencies. We have Strategy. Now, this is a cryptocurrency, buying 130 Bitcoin and establishing US dollar reserve. Now, they didn't necessarily establish US dollar reserve. What they did is they just have a reserve. They've got an amount of cash balances in order to keep their stockholders happy. So Saylor just isn't able to earmark that for purchasing more Bitcoin, at least not at this time. I've got to keep the stockholders happy for Strategy until things turn around. But he is still purchasing more, but they do have a decent amount on their cash balance sheet in order to quell the nerves, if you will. So with all of this, they are pushing stablecoins a little bit more. XRP is now getting adopted. More areas, a lot of news going on with that, but I'm not going to go into that at this moment. We've got the United States rehearsing airstrikes against Venezuela. Now, since Ukraine and Israel are kind of wrapping up all of these things that's going on, we've got to have war somewhere. And the reason that we must is because war drives the GDP. Almost a third of the United States GDP is government spending. The bulk of government spending is in military, defense, and weaponry. So if you look at that alone, the massive numbers, it must continue in some form because simple defense is not enough on its own. And the manufacturing numbers that we're about to get out are not going to tell the tale as it is. So the war machine must continue. So we've got the likes of Raytheon, Lockheed Martin, and all of these doing very, very well in this environment, and they should forward as well because this machine is not stopping anytime soon. So with all of this, I wish you all a wonderful trading day, a good day, and until I see you again, my friends, resist.